What we're going to do is we're going to talk about the supply and the demand side with regard to both gold and platinum, and then we're going to talk about the instruments and all those issues like monetary policy and those kinds of implications. But let's just start with the demand. So Viv, let's start with demand side issues and let's start with gold, because we're building a macro picture here. We've got to decide if we're positive about the outlook for the actual commodity. As far as gold is concerned, we know there's a lot of gold around in the world. A lot of it's been manufactured and mined over time, has ended up in vaults. There's also a certain amount of gold, obviously, in jewelry, and that to some extent gets consumed, or that it does have a tendency to hang around in family dowries and heirlooms and so on. The gold price, if you were to look at it here, I think everybody knows that over the last like 10 years, it did exceedingly well.
Yes.
Moved from like $250 per ounce all the way up to, you know, 2,000 just about. But since then, it's been a bit choppy in the last year or so, and in recent periods, it's been quite weak. And very specifically, in very recent weeks, it's been exceptionally weak, falling all the way back to around 1,400.
Yeah.
So just take us through the issues with regard to demand and why you think the curve has done this over time.
Okay, there's two issues. It's commonly known the love and the hate, sorry, love and the fear trade. The fear trade has dominated the idea of gold in Western markets for quite some time. What it is you go to gold as a safe haven. So the rest of the world is collapsing. You buy gold because gold's going to hold its value. Currencies collapse. You buy gold because currencies are determined by markets out there, by governments printing whatever they want to. Gold, by the way, is just determined by the amount of supply in the world. That's the idea. And therefore, should there be a currency collapse, gold is going to be making you, be protecting your assets. There's also a love trade. That love trade is mostly felt in the Eastern markets, so in India and in China especially. China's just taken over India recently as the #1 demander of physical gold in the world. In those markets, they don't buy gold primarily as a safe haven. They buy gold for, as you mentioned, for jewelry, for those kind of reasons. It's involved in certain traditions, come a wedding, come whatever, yes. You give gold out. And finally, there's also, gold is consumed to a certain extent. I mean, jewelry is not consumption because you keep the gold in its form and you keep it away. You don't actually burn it up. But in a way, gold is consumed to a certain extent by some of the electronic equipment we have there, but that is very small demand.
Yeah, look, I know that in some places gold is consumed also because people take it with them into the afterlife. I mean, they put it onto the funeral pyre and that's the end of it. But, I mean, as far as those factors are concerned, the fear trade element, that issue about demand is really only observed if it works, right? So I know that there are a lot of people who worry about hyperinflation and about all the financial hijinks that we've seen in recent years. But the fact of the matter is that a lot of people were buying gold in this period because that was when the financial crisis was happening. Yeah. That's when everything looked so bad. That's when Bernanke was doing the kind of money priming. But recently, global markets have started to rally. People have been climbing into, growth assets. They've been looking at recovering housing sector here, there, and everywhere. So isn't it true to say that some of the fall off in the price is a function of the sense that A, the safe haven isn't really needed anymore, and B, it doesn't even really work?
Yes, I mean, some of the downturn you could say is because of that, but I think the real drop we had just a few weeks ago was due to the fact that there's been changes happening in Europe. And the European banks, most central banks in the world have a lot of gold. And when Cyprus had its bailout, one of the things it had to do was sell its gold reserves to finance the bailout. I mean, if you had to think of the options when it comes to bailing out a country, either someone else pays for it or you pay for it. If you have to pay for it because the Germans aren't happy paying for things anymore, then where do you go to? You go to your taxpayers, that's going to be a painful thing. You go to the depositors like Cyprus did, which is a big mess up, or you're just going to sell your gold reserves. Of the three, the easiest thing to do is sell your gold reserves. And people started speculating about the idea that the other countries under threat, for instance, the Portuguese, the Spanish, and then someone said, what about Italy? If the Italians had to go out and sell their gold reserves, they would basically put as much gold on the market as is held in all the exchange-traded products in the world at the moment, which would totally flood the market. And that was one of the reasons we saw that big drop-off, beyond just the...
But what's your view? I mean, do you think that central banks are going to be net buyers of gold because they want to have a certain amount to underpin public confidence? Or do you think central banks and the IMF and organizations like that over the next, say, 5 years are going to be net sellers?
I think some central banks, I think the Chinese, the Indians will probably be net buyers. I think some European markets might be net sellers, especially if you have more bailouts that people expect to come through. I mean, the people are talking about Luxembourg and other countries in trouble at the moment. Overall, I do think, however, that if you look at the size of amount of gold out there, the Chinese could never replace the US dollar with gold. There's just not enough of it in the world. So gold will play a part, but it will never be the new currency of the world.
Okay, now let's just look at the other element, which is, as you say, the love part of it, and let's switch to the platinum side of it. As far as demand for jewelry is concerned and, you know, permanent collections and that kind of thing, platinum has had an important role there, white metal, particularly in China. Is that still ongoing? I mean, do you see demand for jewelry on the platinum side also being fairly firm as people get a little bit richer in China, Asia, and so on?
Oh yes, most certainly. I mean, they still go for gold, number one, but platinum is picking up, especially when the platinum price is, as we've seen recently, often dropping below the gold price. However, the primary demand for platinum still comes from the automobile sector, platinum and the platinum group metals, especially if we talk about the miners. So palladium especially and platinum together, they're both used for catalytic converters to make your car's emissions, you know, a bit nicer, less poisonous, etc. And so that is the basic demand for it. The demand, of course, is affected by not just demand for cars, but also about the emissions controls that a country has.
Right, so which are getting tighter as well.
Tighter and tighter. Also, it also depends to a certain extent on the kind of engines you have. The more diesel engines you have, the more platinum you need. The more petrol engines you have, the more you can substitute platinum for palladium.
Right. Well, let's get that platinum price back up here, because we looked at gold a little bit while ago on the 5-year basis. But what I want to see is platinum over 5 years, because, you know, platinum is different. We know that in the gold environment, we have that story with the, you know, a lot of gold around, the mines in South Africa, yes, but there are a lot of platinum mines all around the world. As far as platinum is concerned, you have this